some possible movers today and plenty of earnings which have come through. And we're also joined in by Pankaj Pandey, who is the head of research at ICICI Direct. The Subaros, where margins saw some weakness, there was some visible weakness there in the margin numbers. HLE Glascoat, very strong top line margins. Profit saw a bit of margins and profit, in fact, saw a bit of weakness. Bajaj Consumer, again, very strong across the board. Extremely strong numbers from Bajaj Consumer. So you want to wait and watch out for that. That 18% margin number looked very, very strong. Rolex Rings. Now, I know some of these are smaller companies as well, but Rolex Rings, there's weakness on the top line and on the profit growth. Jindal Stainless is the other one. Strong demand and volume increase that we've seen across the board where Jindal Stainless is concerned. So some of those names and numbers which have come through. Pankaj, hi, very good morning to you. In some of the smaller cap names, anything that's standing out as a theme to you in this earnings season where you're seeing strong tailwind with regard to how growth as well as margins have played out?
Yeah, hi, good morning. So thanks for having me. See, on the smaller cap side, I think pipe is something which we are liking. So we like the numbers of Astral along with Prince Pipes. I think whosoever has got limited or lesser exposure towards the Jalsinal segment, I think those have done well. The CPVC segment has done well, and our sense is that in the second half, CPVC segment is expected to do a lot more better. And so that is the segment what we're liking. Otherwise, most of the mid cap or small caps, again, those are sort of stock specific in nature. So for example, NRB bearing, within the bearing companies, we continue to like, numbers have been okay. I think what we are liking is that the company is looking to sort of do a capex of 200 odd crores, eventually chasing a top line of 2,500 odd crores. And this company is trades at half the valuation of their MNC peers. So numbers were decent. So we like this. We like the defense names. Say for example, Solar Industries. I think the defense segment witnessed a pretty good growth and is sitting on an order book of somewhere about 15,000 odd crores. So while the domestic explosive segment has been weaker, but exports plus the defense segment has been pretty good. So that stock also sort of continues to look very attractive to us. JSL also, I think the EBITDA per ton has been better than what we were estimating. We were looking at 20,000. It came out to somewhere about 21,400 odd. And I think any kind of anti-dumping duty, if it gets levied, will offer a good amount of relief because in general, stainless steel as a segment does better in terms of volume growth of 8 to 9 odd% compared to traditional steel. So again, very stock specific, but yes, in general, earnings are slightly better than the muted expectations.
Okay, so once again on the markets. And Pankaj, give us your sense on some of the smaller FMCG companies and particularly on Emami. We've seen numbers coming in from Emami. One-offs have impacted the numbers this time, but still you have some brokerages that are optimistic on the stock, and we're also seeing an upgrade coming in from one of them, Elara, to be particular. Your take on something like in Emami, because now the GST cut is underway. You have that extended summer that has done well for their Dermicool portfolio. Your take on this stock? Any coverage over here?
So Emami, we don't have a coverage. We are very selective in terms of liking FMCG companies, largely companies which have got a higher proportion of food. So the likes of say, Tata Consumer or Marico, where we are expecting a double-digit kind of a growth is what we are sort of preferring. Otherwise, while yes, there could be some improvement in the second half, but at best, most of the FMCG companies, combination of both volume plus value is expected to sort of deliver a high single-digit kind of a growth, which is not good enough to outperform the Nifty earning growth, what we are anticipating.
So that's the take coming in on Emami, Nestle. But Pankaj, while we're talking about the FMCG pack, Britannia, of course, that stock is going to be in focus on the back of Varun Berry's resignation. Your thoughts on that? And the overall large cap staples from the FMCG pack, they've done brilliantly this time, be it in HUL, or Nestle, or Britannia in terms of its earnings. Do you think the tide is turning for FMCG now?
So on Britannia, yes, I think overall sense is that from a biscuit company, this company got transformed to a sort of a food and snacking company, the margin profile significantly improved from mid-single digit to a mid-teen kind of a margin. So yes, there'll be some impact, but in general, like I said, FMCG. So our sense is that while we are not going to see too much of a price correction, but time correction is what we would anticipate for FMCG in general, because higher discretionary spending is not likely to sort of drive FMCG counters. I think we are more structurally positive on consumer durable names. While yes, HUL or others might have, or we might see overall from the perspective that these stocks are relatively stable at current prices. But I think given the earnings and even with the valuations of nearly 45 to 50% on a forward basis, we see limited headroom for outperformance.
Okay, the other one